Those are some comments that are coming in from Uday Kotak in that special conversation that I had with him a short while ago. Hostile takeovers, that's the sign of a mature capital market. M&A, bold aspirations, the need of the hour, need a signal from the government to say that business can take risks fearlessly and openly. But let's move on to the other big story tonight. There are a few sectors which have always been considered too tough for investors to make money from. Retail is certainly one of them. Almost all retail companies over the last 10 years have done poorly. Avenue Supermart, which runs the D-Mart supermarket chain, has raised huge hopes for the sector. What's the reason? Investors are putting their faith in the company. Priya Sheth and Yash Jain find out.
The first thing which investors talk about when discussing D-Mart, whose parent company Avenue Supermarts listed today, is the man behind it. Radhakishan Damani is a stock market legend. He has also been, over the last several years, recognized as a savvy businessman. A look at the company's financials makes this clear. On a compounded annual growth basis, revenues have grown 40%, operating profits 47%, and profits 52%. Last but not least, the company owns the land on which its 118 stores stand.
D-Mart is an example of a persistent promoter who never gave up. An example of a young team who had a lot of promise and energy but needed sound guidance and mentoring, which it got from RK sir.
D-Mart's performance becomes even more sensational when you pit it against others in the space. Return on equity is perhaps the most sacred number for investors. It is simply a measure how much a rupee invested in a business has returned. The higher the number, the better. D-Mart's return on equity towers over the others at over 21%. The Avenue Supermart stock opened up 100% from its issue price and closed even higher. On the NSE, the stock closed up nearly 115% at 641 rupees. This gives the company a market capitalization higher than FMCG biggies like Britannia and Marico. So, is it all priced in? What now for investors?
Well, if you're a long-term investor, you're looking at a 3 to 5 year horizon, definitely there is great value because, yes, there is a euphoria on the listing day, which will settle down in the next few days. But if you're a long-term investor, you want a large size, today is the day to buy it. That's what people have been doing.
We have given a target price of 660 rupees for 18 months. Today, the stock price has risen very sharply. So you see, the near term, your fluctuations can be there in the stock price depending upon the demand and supply and other things.
The outlook for retail spending in India remains bright. While most of this spending right now is captured via the unorganized market, the expectation is that this will increasingly shift towards the organized players. Market veterans believe that D-Mart, with its strong parentage and financial discipline, will be able to benefit from the structural tailwinds that the sector provides. In Mumbai with Priya Sheth and Yash Jain, Kritika Saxena.